Aloha, good day. Thank you so much for joining me in today's Health and Life segment. I'm going to give it a little bit of time for some people to be able to come in before we start. So hop on. It's going to be 30 minutes of live action health and life advice, benefits for both health insurance as well as life insurance, and some of the benefits of life insurance. And so jump on in. Jump on in. As you can see, it is a bit noisy out here. I am enjoying a beautiful fall day, for real fall this time, in Houston, Texas. So one thing that I like about the social connection aspect is it doesn't matter where you're at, you're able to get the same information as someone that's able to attend. So convenience is key. We're just going to give it a little bit of time to give some people an opportunity to jump on. We're going to start at 12:05. And please let me know if that chime is too loud. I'm going to see if we can be able to silence it if it's too much of a distraction, but let me know. Okay, so it is 12:05. Allow me to introduce myself. My name is Ashanti Bell. I'm also known as Ashanti Orozco Bell. It depends on how you've heard me introduced, but I'm Ashanti. I am the CEO of Circle Network, and I will be your host today. Today's segment is going to be regarding the benefits of life policies, whole life policies, some of the amazing benefits and amenities that they can do, ways to be able to save for your future, create a revenue flow for your future, as well as how to be able to benefit off of what you put in and invest in yourself. And so I'm going to be sharing some pretty awesome deals about what whole life benefits can do, and some of the benefits and how you can be able to use them to further whatever plans that you want to be able to do in your life. The amazing thing is that there's no necessary roadmap to life, but there is also and always opportunities for you to be able to educate yourself, to be able to know how to do something better, and to be able to grow and learn. And as humans, we're always learning and growing. So we are the original technology. So I just want to give you an opportunity to hear some of the benefits of that and see if it's something that fits into your lifestyle and how you can be able to really think outside of the metaphoric box. And I was to have a co-host today. I know I advertised a co-host, but life happens. And so we will be touching a little bit on the PPO versus HMO aspect of health insurance, especially in the current climate of healthcare coverage and open enrollment. There are some things that consumers definitely want to know. How is this going to help me, and what's the difference? You know, it seems to be, besides price, what is the difference between the plans and the networks, and which one would better fulfill the needs of the network that I need to be in based on my health specifications. And so we will be spending a little bit of time on that. But let's go ahead and jump right into whole life insurance. And so most people's perception about whole life insurance is that, okay, it's to be able to take care of my beneficiaries whenever I pass away. And that is definitely the main priority and main functionality of this type of policy. People insure all different types of things, from their cars to their houses, to different parts of their work that may be, give me 1 second. Let me get a charger. My light just came on. Let me get a charger. I will be right back. just change locations altogether. Change locations altogether because I need to be able to be closer to this power source. I don't want to go in the middle of telling you guys some really good stuff. So give me 1 second. While we're at it, how about we set with that time? Okie dokies. Moving with the ever-changing winds of life. All right. So let's try this. No interruptions. I should not have to charge my battery because I'm plugged in to a power source, and we're going to keep moving forward. Okay, whole life insurance. So most people's idea of whole life insurance is that it's there to be able to protect them. Well, not protect them because they're gone, but their beneficiaries when, you know, they are deceased, to be able to take care of their lifestyle, depending on what the face value is that you're looking for from that policy, be able to take care of debts that they have so that they don't leave that worry to their families and their loved ones. And that's one of the most important functionalities of whole life insurance. But there are so many different pieces that you can be able to use for that. So let's break down whole life insurance into 3 different steps. We're going to say our final expenses, we're going to say if we get sick, and we're going to say how can we be able to loan ourselves or invest in ourselves. So let's start with final expenses. Final expenses is something that is definitely you can plan on. You know that there's a cycle of life. We're going to be born, we're going to live, and we're going to die. That is just the cycle of the life will, I guess, for all living organisms. And so knowing that we have options to be able to plan for birth, life, as we're living life, even though those are a lot of unexpected things that happen within those periods, we can plan for those pieces, that unexpected factor, and death. And so whole life insurance essentially, a big chunk of that, a big portion of that is to be able to pay for the final expenses when you die, be able to pay for your burial, be able to pay for your debts that you may have had, be able to take care of the estate, be able to take care of your loved ones, with the aspect or thought process that you are the, hi guys, welcome to the live, with the aspect and thought process that you are the main beneficiary or the main caretaker of all of these people. And so what's going to happen to them after you die? And so with that process being put into place, insurance found a way to be able to say, we can plan for that for you. And so being able to take care of, depending on how much you think that you need to take care of you, a consultant is able to figure out about how much whole life insurance that you need, or how much life insurance that you need in general, to be honest with you, because there's term life insurance and there's whole life insurance. But being able to figure that in with what you're looking to do, what you have on your equities right now, what you have as your liabilities right now, they can figure out what face amount value that you need for that policy and be able to say, okay, this is how much you need to spend on it. This is how much you need to invest in your final expenses. But one thing that differs between whole life and term life is the cash value benefit that it does offer. And so one will fit into essentially the 2 brackets of the expenses of when you die, your deceased expenses, as well as your critical illness expenses. What if you get sick? But it won't fit into that 3rd bucket, which is how can I be able to loan against myself, or how can I be able to offer myself financial benefit from this policy. That is something that only can happen with a whole life insurance policy. So with your whole life insurance policy, let's go ahead and go to that critical illness. So if you get sick, a lot of people think, okay, with whole life insurance, all I can be able to do is when I die, it goes to my beneficiaries, which is great, but how does that benefit me right now? Well, life insurance actually has a factor that's built into it for sickness. So if you get sick, if you have a critical terminal illness, you can actually be able to take up to 70% of what that face value is of that policy against it for whatever you need to do. And the thought process behind that is, we know that you're sick. You're going to need something to be able to sustain you through the sickness. We know you're not going to be at your best, right? You're not going to be at your 100% because nothing can work if you can't work. And so here's some money to be able to use towards this new life event that has happened to you, this new sickness that has happened to you. And so you can actually be able to use that 70% of your face value of that policy and take that up front if you get critically ill. And so that's where that fits in. And that really helps for diagnosis like cancer or terminal illness that affects people's everyday life. And so that's one of the really great policies or benefits that is added in the whole life life insurance bracket. Okay, and so let's go ahead and move on to the how can I loan against myself, which is one of the most important factors that I love to be able to educate on, because a lot of people don't know that they can be able to be their own funding source if they plan wisely. And so wise counsel changes, you know, the heart of the king, changes the ideas and plans of many, just being able to have wise, knowledgeable counsel. And so, you know, each one teach one, right? All right, so your whole life insurance policy, you can actually be able to, it has this built-in rider piece in it, which is considered, or it's called your, what is it? Your accumulator, your what is it? Value accumulator. And it's essentially what it does, it accumulates money for you. It's really cool. It accumulates money for you. So the longer that policy is in effect, it's actually creating interest on that policy for you. And so that money accrues and accrues. And you can actually be able, after a certain time period of that policy being instated, you can actually be able to take distributions from that policy upfront or in sessions. That's a really cool added piece. So let's say you have a $500,000 policy, right? Okay, $500,000 policy, you're spending this money in whole life insurance, right? You have some type of venture that you want to do, or you have a new house that you want to buy, and you don't want to be in a system of borrowing this money from the bank. You don't want to ask friends and family for this money. You want to be able to take this and you have it and you own it, right? You can take, let's say, $250,000 out of that $500,000 policy, and essentially what it does is, upon dispersion of the benefits to the beneficiaries, upon dispersion of the beneficiaries to the beneficiaries when that person dies, it essentially minuses that, it deducts what has already been taken plus, you know, some interest from that, and pays out the beneficiaries what is left over. So let's say you have a $300,000 or a $500,000 policy, face value policy. You take $250,000 from that policy. Your beneficiaries are looking at a little bit less than $300,000, which is still a lot of money, right, to be able to bury you and be able to do that. Or let's say you want to be able to go into something huge, you know, you want to take $400,000 from that policy. You're able to take that out depending on the instatement of that policy, how long that policy has been instated. And so it builds that accumulator for you. It has that benefit added accumulator rider built into it so that you can be able to do that from your whole life insurance policies. Now, your term life insurance is not going to have that same benefit to it. They do have a critical benefit added to it that you can add additional to it, which is really great, but it's not going to be able to build or accrue anything from it in reference to you being able to deduct anything from that policy. And so in those cases, they tend to be a lot less expensive. They are a certain type of term. So they're saying, how long do you think you're going to need this for? I'm going to need a 10-year policy. I'm going to need a 30-year or 20-year policy. I'm going to need a 30-year policy. Some places have 15-year policies as well, but it just depends on what policyholder, what person that you want to get it from, not person, what policyholder or policy home you want to get it from. We're going to go with home right now because I'm drawing a blank of what I'm thinking about. But so it just depends on where you want to get it from. But some places have 10 to 15, 20 to 30. Some just have our 10, 20, and 30. I know with the company that I'm with, we do 10, 20, and 30. And of course, the 30 is one of the least expensive plans that you can have, but it's definitely going to protect you for this final expenses portion, as well as the critical illness if you add that rider to it. So that's a really great benefit of that. I have some clients that have used their whole life insurance policies for the loan against themselves aspect of it, and it's really a really great piece. And so these pieces and these things are not just taught to anybody. You know, the information is out there, but if you've never been directed to it, or if you don't even know a reason why you would look into it, why would you look into it? And so, you know, my people die for lack of knowledge. I definitely believe in that saying, and we see it play out every day. So that's one of the benefits, or a few benefits, of your whole life policy versus your term policy and what they actually provide for you. And that's a really great aspect of it. So let's go ahead. We have maybe, I'd say, about 10 more minutes. So let's go ahead and jump into the health aspect of it. So we have your PPO and your HMO. Now we have EPO that's out, and there's a few different networks that are out, and those had to be created due to the monopolization of those two categories, and just really being able to have the network to fulfill it. And so they broke it down and said, you know what, we're going to bring in these other networks. They're going to be a little bit less expensive. They're going to be a little bit more restrictive, but people can be able to get some of the benefits that they need from these pieces as well. So we're going to go with the two most common ones. That's going to be your PPO plan. That's going to be your HMO plan. Now, your PPO is your preferred provider organization, and that network, I like to say, think of it as YMCA. Okay, we're going to use this as an example. I have no affiliation with YMCA, so, you know, let me just put that out there as well, because I know everybody likes disclaimers. I don't know anything about the YMCA. I'm just saying, for all intent purposes, the PPO plan is kind of like your YMCA group, right? So you have these providers that are a part of this program that says, okay, we're going to give your specific providers or policyholders these discounted rates, and we agree to abide within your ramifications of what's billable versus what's not, and we can provide services to your policyholders. And so the PPO is more general. You can see a YMCA pretty much anywhere. Every state pretty much has a YMCA, and it's very vast, but it is an organization that they still have to be a part of. One of the great things about PPOs is they give you the option of in or out of network benefits. So of course your out of network benefits are going to be more expensive. You have your own deductible, your own co-insurance that you have to pay for your out-of-network benefits versus your in-network benefits. But it does say if you have things that are going on, let's say you go into the hospital, right, and you're going with your surgeon is in-network, but you don't know if that anesthesiologist is in-network. You don't know if that that nurse or that specific skilled facility is in network with your insurance, and you're just, you know, being put where you're being put based on how surgery is set up for you. And so it says if any of those people are not within this network, within this group that we have, we'll pay benefits to it, but you have to pay a higher, your portion, for us to pay anything towards this. And so it's basically like a buffer. And that's really good for people that have health issues, because one of the things about it is you're not going to really know if you stay in network. That's excellent. I definitely always suggest that my clients stay in network. It's so much as picking up the phone and saying, hey, is this person in my network? Is this not? A lot of doctors' offices, a lot of facilities do this for you as a convenience to the policyholder, but the policyholder should know what their insurance is. And I know they make it really difficult with all this, you know, lingo and all this mumbo jumbo legal stuff, but you have to know what you're buying and what you're getting so that you know what your portion is going to be. And so you're just calling them and saying, hey, is this provider in my network? They'll tell you, your insurance will tell you, yes, we're in a network, and yes, no, we're not. But in cases where that can't occur, or whatever the case may be, having that out-of-network benefit is really helpful, because even though, yes, you're going to pay more, you still have that coverage. And so that's your PPO plans. Your HMO plans are more like your country clubs. Right, your country clubs, your golf clubs. I'm going to say golf clubs because that's a little bit more specific. Your golf clubs, right? So these clubs that are more specific, more towards a specific interest point, right, which is health, just your basic health benefits. It has a more restrictive network. You tend to really have out-of-network benefits with an HMO plan, and so you don't have that buffer. If you're out-of-network, you're just out-of-network. You have no type of backing or covering. It's you 100% all the way. But they do have a network of facilities that are licensed with them, or an agreement with them that says, hey, we will take on your policy holders. We'll give them a special discount, and we'll abide by your regulations in reference to what's billable and what's not billable for your policyholders. And so that's really good. You just have to be more strenuous in making sure that you call. That's the only thing with the HMO. So if you feel as though, if you don't have a lot of health issues going on, so you're not foreseeing being in the hospital and having that, this provider is in network, but this one is not. If you are really going for more health benefits, I just need my checkups, I just need to be able to have that health coverage or health benefit when I need it, then that is a good option for you, because it's definitely less expensive. You definitely have to get referrals. Some places, some HMOs, depending on the type of HMOs you have, say that no referrals are needed, but most of the time that is a characteristic of an HMO that says you have to get referred from your main provider, your primary care provider, to another specialist before you see that specialist. So that's another piece that they have. That's an added piece to that. It's a little bit more restrictive. You have to be more patient. But at the same time, if you do not foresee having a lot of health issues, it's a great alternative to go, because you have benefits, you are covered, and you can be able to choose your network of facilities and providers yourself. Very hands-on, very specific. And so those are the two differences between your HMO versus your PPO plans. Your HMO is going to say, hey, we are the golf club. We are more specific to what you can do. It's going to take a little bit more time, but we do cover you. Your PPO is going to say, we are pretty much accepting of everybody. We're anywhere that you need us. And, if there's somebody that's not a part of it, we'll still cover you. It's going to be more expensive, but we'll still cover you. And so, it's just, that's the difference of it. Do you want more broad health coverage? Do you have health issues that that you're going to be needing to see numerous specialists for? You don't want to have to wait for that authorization from your primary care facility to say, yeah, you can see that doctor. No, you can't see that doctor. Do you foresee yourself going to be having those transitions where maybe that person may not be a network, maybe they will? If you do fit into that category block, the PPO is going to be a perfect plan for you, because it definitely covers you in all of those segments, or all of those different transitional states that you'd be going through health-wise. If you do not foresee yourself needing all of those things, you know who you want to go with. They are a part of your network. You only really need it for the benefits of having your annual checkups. You don't have a lot of health issues going on, the HMO is going to be really helpful for you, because it's going to save you some money, and it's going to allow for you to have the added piece of just really choosing who your network is going to be of the providers that you have. So that is that regarding your health and life segment. I'm looking forward to being able to put on more of these. Us as a team at Circle Network, we definitely appreciate you guys coming and helping to build us up. That is what we do. We are a network of professionals that build each other up, essentially. We are a business consulting firm. We have our special niche in healthcare. I like to say we connect need to resource. But then I'm also a licensed insurance agent in the state of Texas, as well as a business consultant for a multi-million-dollar supplemental firm. So we add those benefits to our circle network to be able to take care of not just healthcare professionals, but any type of business, any type of individuals. So our passion is education, and we want you guys to be able to get that firsthand, and be able to apply it in your everyday life, right? So it is about 25 minutes in. If you guys have any questions, I'll stay active for a little bit. But thank you so much. Have a peaceful and productive day. And thank you for joining us. Thank you for the opportunity to serve. Take care.